Welcome to the very first episode of Pilot Unplugged, Ask Me Anything. I'm Jennifer Ford, and I'll be your host for this series. And today is a really exciting one for us because this is our very first podcast at Pilot Energy. And the whole point of this series is what the name suggests: open, honest conversations about the energy industry. We asked our audience to send us questions they've been wrestling with when it comes to energy markets, energy strategy, sustainability, and how organizations can navigate all of it while still running a business. And honestly, you all delivered. Thank you so much. So today, we're going to tackle a few of those questions with two of our in-house experts who spend their days helping companies make sense of the energy markets and build smarter strategies. So today, joining me is Dave Hennickes, Director of Growth Initiatives here at Pilot Energy.
Thanks, Jennifer. Very excited to be here.
Awesome. And we also have Ricky Hopp joining us, our Vice President of Commercial and Industrial Sales and Marketing.
Thank you, Jennifer. I'm so happy that we have a podcast now. This is something that I think we've wanted for a long time, and thank you for making it happen. So looking forward to the conversation.
And really, Ricky, that is the spirit of Pilot Unplugged. So before we get started and jump into the questions, I want to take a quick moment to explain a little bit about who we are at Pilot Energy, because we may have some listeners today joining us who aren't familiar with what we do. At Pilot Energy, we work with large commercial and industrial organizations to help them navigate the complexity of energy markets and help them make smarter energy decisions. That sounds interesting. Dave, can you expand on that a little?
That's right, Jennifer. So, energy is often one of the largest operating expenses of commercial and industrial businesses. And so what we do is help them take control of their energy and manage, anticipate, and save costs where they can.
Awesome. Ricky, did you have anything else you'd like to add?
Yeah, we like to be an extension of the clients that we serve, right? Many companies are not set up to be able to properly manage energy at scale, right? So many of the teams that we work with, they know that energy is a very important part of their overall OpEx expenditures, right? But oftentimes their teams are quite small. So we like to come in and work with them and become an extension of their team to help them achieve their goals.
Yeah, so things like running a competitive process to procure long-term contracts for their energy at the right time, doing a no-cost utility bill audit where we often, 70 to 80% of the time, can uncover very significant savings. And those are kinds of things that we help our clients do.
Awesome. So really, at the end of the day, it's the same as our mission, helping people better understand what's happening in the energy world and helping them make the best decisions when it comes to their energy.
That's right.
All right. So with that, let's jump into our first question. And our first question comes from Mark, a facilities manager in Springfield, Missouri. So Mark asks us, he says, our facility runs 24/7 and energy is one of our largest operating costs. Over the past few years, we've seen significant swings in electricity and natural gas pricing, while at the same time, corporate leadership is pushing for stronger sustainability targets. It's really becoming a challenge to balance cost control with long-term energy strategy and decarbonization goals. So what practical steps can food manufacturers take to manage energy price volatility while still investing in more efficient or sustainability operations? So Dave, I want to start with you on this one because we see this a lot with manufacturing customers struggling with balancing those swings in pricing and electricity.
So what I always tell food manufacturing companies is don't treat energy as an overhead, treat it as a core component of your operating structure. And what that means is developing a strategic procurement and energy strategy.
Awesome. So what I take from this is maybe if it's been a little while since you've looked at your energy strategy, it may be worth looking into or getting another opinion. So what does that actually look like in practice for food manufacturers?
It means usually is layering your procurement in over time rather than purchasing all at once, and that's one of the things we do. Companies have hedging options. There's multi product environments to layer in different hedging strategies. And what we help them do is determine the right time and, as I said earlier, run these RFP processes to get them the best deal over the long term for their energy contracts.
Just to add to that, if you were to look at the deregulated energy market forward curves, right, which we look at every day, you would quickly be able to diagnose that energy is one of the most, if not the most volatile commodity in the world. It's not there. There's very few commodities out there that every 15 minutes there's a new price, and that price can go from $10 a megawatt hour to $1,000 a megawatt hour, sometimes even negative, right? So we focus a lot on working with our clients to say, okay, how are you diversifying your purchases over time, over a longer span or a longer horizon, to make sure that you're getting a defendable energy position that you can show to your entire board, your C-suite, and say, we took the necessary steps to understand what the market was doing and where we could take optimal layered energy purchases, as Dave was describing. So that's something that we really pride ourselves on. I think it's something that more manufacturers are moving towards, and understanding that sometimes one energy purchase can be just as risky as no energy purchases. So diversifying those purchases over time, we are seeing it be a more effective way to procure energy.
Yeah, those are really good points, Ricky. And also, I want to touch on sustainability a little bit, because Mark also mentioned decarbonization goals. So where does that kind of fit in this equation?
Yeah, sustainability has become a very important part of a manufacturer's decision criteria. I mean, if you look at 10 years ago, cost was the number one driver, and efficiency, right? And then I would say 5 years ago, it was looking at renewables, and you looked at a lot of, like, especially food manufacturers have clients like the Walmarts of the world, the Targets, retailers that were really relying on their manufacturers to focus on purchasing from renewables and having much more sustainable practices. And that was really driving a lot of those decisions. Now, sustainability is still important, but it's taken on a more holistic lens of cost, renewables, and resiliency. So when I say cost, I mean affordability, renewables, and resiliency, and wrapping that all together, and experience, right? Manufacturers care so much about uptime and just operating, right? And making sure that they operate and that they are not having downtime, because that's money. Resiliency helps ensure uptime, and it helps ensure that they're continuing to have their processes and they're able to produce what they need to do to be able to get into customers' hands. And customers are still concerned about making sure that the products that they buy are coming through sustainable practices. So you're seeing the strategy evolve, I would say, where cost, sustainability, and resiliency are all coming together. And it's making things more complicated, but the nice thing is there's new technology and opportunities to help manufacturers optimize all three of those.
Okay.
Right. And I'd add one thing to that: data visibility. Having good energy data visibility is critical to their operations. So if they want to achieve certain sustainability targets, having real-time, digital available data visibility into equipment, processes, and the specific, almost to the specific, operating equipment level, is what great enterprises do to get control of those energy costs.
Yeah. When they used to do their financial models to say, okay, well, our chiller is coming towards the end of its life, or our manufacturing equipment was no longer operating, they have to shut down a part of their process, right? And that goes into their CapEx equations, right? In terms of their payback periods. Now, with the introduction of things like artificial intelligence, There's a lot more that can be done without having to shut down your processes and to have a better line of sight as to when they will absolutely need to upgrade equipment. Um, and we've seen some of the manufacturers that we work with in implement this incredible like software that uses artificial intelligence that does these nano adjustments across all their different components, and it's things that operating teams just weren't able to do with from the naked eye in history. But now there's little adjustments that you don't even see at the human eye level, but that can improve efficiency 10 to 20%. And then there's also triggers on temperature load, vibration, things that the software can identify that says, okay, this equipment may only have another year or so of life. Now you need to start thinking about how are you going to maintain it to get another 2 to 3 to 4 years. So the technology with artificial intelligence is allowing current equipment to last longer, and it's also making more investments pencil and manufacturers be more profitable.
That makes a lot of sense. So what I'm gathering here is even just a small operational change can save a surprising amount of energy. And I even see a little decarbonization triangle here. So if we want to summarize this for Mark, we're talking about 3 big steps: efficiency improvements and energy data and monitoring. Is that about it?
Yeah, and I would say, Mark, if you haven't had a company look at your utility bills as a whole in quite a while, it'd be a good idea to do that, because that too can uncover a lot of potential savings and opportunities for you.
I would just also add, you don't have to solve everything at once, right? This is a complex world that we live in right now. There's a lot of different things you can do before jumping ahead and replacing all of your equipment, though. See what technology is available at your disposal to be able to optimize what you currently have would be my recommendation, because I think there's technology available now to help more in the last couple of years than was available even 5 years ago.
Awesome. Good points, Ricky. Thank you. Okay, so we're going to move on to our second question. This comes from Danielle, Director of Property Operations out of Dallas, Texas. So Danielle asked us, she says, we manage several large office and mixed-use buildings, and energy costs have become one of our biggest operational expenses, especially with the fluctuating electricity prices and increasing pressure from our tenants and investors around sustainability and ESG reporting. So at the same time, their occupancy levels and usage patterns have changed since the pandemic, making it harder to forecast energy needs and optimize building performance. So her question here: how can commercial real estate owners build a smarter energy strategy that helps control costs today while also positioning buildings to meet future sustainability expectations from tenants and investors? So Ricky, I know you work closely with a lot of real estate portfolios. So what would you say here to Danielle?
Yeah, it's a really good question. Thank you, Danielle, for that. Commercial real estate used to be, I don't want to overuse the word simple, but it was very predictable, right? Before the pandemic, everyone went into the office, 9 to 5. The loads were incredibly predictable, but then everything changed once the pandemic happened, and then we're still dealing with that today. Some tenants in a building are requiring people to go back to work every day. Others have a remote policy. Energy loads are constantly shifting, and sometimes people are coming in and working half the day, and you don't know what half the day it is. It could be the morning, it could be the afternoon. So it's getting harder to forecast energy usage in commercial real estate. So that's one challenge that we're seeing. Additionally, you need to design the buildings in a way that make it where people want to go back to the office. And there's more focus on that now, where the expectation was that people were going to go into the office regardless. Now it's, for those that have the choice, if their office doesn't have that welcoming, a lot of times a sustainable feel, a feel that makes you feel like you want to be in that office, they're you're going to continue to fight getting occupancy back into the building. And that could be from just the visual aesthetics of how a place looks with plants and sunlight uh, and just overall, yeah, the overall feel of the office, but also in the controls and the smart energy controls, right? Where it used to be where all of the air conditioning would pump down on people at the same, but you might like the temperature to be at 70 degrees. You might like the temperature to be at 68, right? Eh, Everyone has different comforts and feelings of how they like to work and how they're most productive when they are working. So, this is another challenge that we're seeing, and energy actually plays quite a big role in making sure that you get people to come back to the office to have more predictable loads that can be controlled. So, and also tenants, I would say the last thing is tenants do care, again, that there are sustainable practices in commercial real estate. So LEED certification is still, if not, it was always important, but it's become even more important for tenants to make sure that if they're going to take office space, that there are sustainable practices that are been implemented throughout the building. So
Yeah, I really feel like since the pandemic and not being in the office, and maybe even being in the office half the time or a quarter of the time, that energy efficiency is just not there. People are still spending a lot of money to use the lights, the AC. So I really feel like a good procurement strategy is what these commercial real estate places need. Dave, can you touch on that a little bit more?
Yeah, I think procurement is still a huge role, especially now in real estate. I think what we're seeing is tenants are tying energy procurement and operating costs directly to, the asset values that the building owners are trying to maintain. There's equipment life, as Ricky mentioned. There's maintenance costs, and energy procurement is becoming part and parcel, very integral to that strategy. So what we what we see tenants trying to do is make sure they can manage their risk, meaning volatility in energy prices, as well as optimizing, those costs around different office times and things like that.
So really, it's not just operational anymore. There's also a financial strategy behind it.
Exactly. Yeah.
I would say also tenants, they're asking better questions now too, right? They want to know things like what's the building's energy intensity, are there renewable energy programs, things I touched on earlier, right? They care. They want to know that sustainability is part of the building's strategy that they're going to be working out of, right? So um, it's becoming more complex, but having a thoughtful procurement strategy that forecasts not on the way things used to be, but how things are now and how things are expected to be with a changing hybrid office, come and go type of a policy, as well as ensuring that sustainability is implemented throughout the building envelope so that people feel more comfortable when they're going to work and that they want to be in the office are critical aspects of commercial real estate that we're seeing.
Okay. So if Danielle is going to think about the next 5 to 10 years, what should be top of mind for her?
I would say first invest in smarter building controls, right? These are the things that help ensure that your tenants are comfortable and happy in a building, right? But they also provide more dynamic opportunities to reduce peak demand in times when energy demand is at its highest, right? And the ability to be able to adjust in a much more dynamic way where you're not just turning off the air conditioning across the building, you're segmenting different parts of the buildings so that you're being more optimal. I'd say that's probably the number one thing. And then the second is look longer term for your procurement strategy, right? Make sure that you're partnering and looking at, okay, here's how our energy usage is now. Here's what it used to be, and here's where we think it's going to go, and be very thoughtful in that and align your purchasing strategy towards the next 3 to 5 years, as opposed to looking at just 1 year forward. And again, take a bit more of a layered purchasing approach as well here. I think makes sense, where you can have diversified purchases. But as part of your procurement strategy, it's important to look at how do you reduce those very expensive peak demand charges that drive a pretty large part of the overall energy bill. In addition to having a layered purchasing strategy, making sure that you have your sustainability reporting really locked down and making that an asset for your portfolio, because again, your tenants and your investors do care about that, and they want to see that you're taking steps to improve the sustainability and just the overall, you know, the feel of your commercial real estate portfolio. And that adds to the value of those properties. So again, thinking about just your overall business objectives, having sustainability reporting is not just a cost, but it's also a value add for your commercial real estate portfolio.
Awesome. Lots of great advice for Danielle, and thank you for that question. Okay, so we're jumping into our final question today. Comes from Jason, Senior Director of Facilities and Energy Management out of Columbus, Ohio. So Jason writes, our company operates hundreds of stores across multiple states, and one of our biggest challenges is managing energy costs consistently across locations that all have different utility markets, different climates, regulations, and rate structures. On top of that, we're being asked to improve store efficiency and support corporate sustainability goals without disrupting our store operations or the customer experience. So, what strategies should large retail chains consider to better manage energy costs and procurement across a multi-state portfolio? Dave, I feel like this question probably resonates with a lot of multi-state companies across the nation.
That's right. Yeah. Thank you for the question. And as you said, lots of states, lots of different regulations often means lots of complexity. And so what we usually say is the first step is centralizing visibility and control.
Yeah, I totally agree. So step one really is understanding what's happening across the portfolio. Is that it?
Yeah. And I think so here again, like other industries, developing a portfolio-wide procurement strategy and approach once you have visibility and control is what we usually advise. You know, there's lots of different tariff structures and rate structures in different markets, and once you have that visibility combined with things like a utility bill audit, you can get a good picture of how to optimize those costs and optimize that strategy over time.
So one word that comes to mind, Dave, when I'm thinking about all this is hedging. Hedging electricity in deregulated markets. We wrote a blog on hedging recently, Hedging 101, and it explains all about that. But for those of us who are joining us today, can you touch a little bit more on what hedging actually means and why it could be a good strategy?
Yeah, hedging is simply a term that means making decisions of when and at what price to purchase your energy, your water, your natural gas. And so companies that look into different hedging strategies, they're typically being offered a variety of different options. Do I buy all fixed price, all up front now for 3 years? Do I layer in hedging over time? Kind of like in your personal portfolio, dollar cost averaging comes to mind. And hedging is simply a structured approach to layering in the right kinds of purchasing decisions for your energy and other, over a period of time. That manages two things. One, your cost objectives, and two, your risk objectives. And let's not forget, risk this is one of the most volatile markets in the world. So risk is a very important factor in that hedging decision.
Yeah, definitely. Thank you for explaining that. So really how that works, if prices spike, you're not fully exposed. And if prices drop, you still have opportunities to capture those lower rates. That's what I'm gathering from that. Thank you, Dave. So now, Ricky, where does efficiency really come in when it comes to these multi-state portfolios in the retail state?
Yeah, the nice thing about efficiency when it comes to the multi-state retail portfolios is a small improvement can scale because again of your large diversified portfolio. So being able to find something that helps improve, through a smart thermostat or some sort of a small improvement in refrigeration can scale, right? As long as you have a partner that can scale that at a national or a regional level wherever your operations are. Oftentimes, though, we find that retailers work with very localized contractors that do the upgrade work, but can't replicate that across numerous sites. So I do think that there's opportunities if you can find a player that can scale with you and your portfolio, you can maximize a lot of those efficiency gains. I also think it's important that you look at how those efficiency gains translate into your procurement strategy. So kind of going back a little bit to what Dave talked about, right? When you're improving your lighting or your controls or your refrigeration, and if you're able to reduce that, I go back to that peak demand, because that peak demand is what's really driving a lot of the excess costs, and retailers are constantly looking at how can I reduce that peak load demand, or my capacity tag in certain markets that has a different name depending on what state you're in. But if you can reduce that, that can significantly help improve your overall procurement costs. But you need to be on the right procurement structure to be able to realize those gains. So making sure that the right hand, when it comes to efficiency, is talking to the left hand, which is your procurement department. Making sure that communication is happening is absolutely critical. So I would say, being able to look at your portfolio holistically and understanding that even a very small incremental gain can translate into large savings, but also making sure that any improvement that you do make on the efficiency side, your supply procurement structure is able to take advantage of those improvements.
Thanks, Ricky. That was a lot of good information. So I want to touch on sustainability a little bit. What about sustainability goals?
Yeah, sustainability remains a very important strategy for retailers, right? Their customers are focused on making sure that they're spending at places that align with their beliefs. So you're seeing more retailers over the last 5 years doing things like power purchase agreements off of renewable assets, solar and wind. For those that maybe don't have the ability to take as large of a offtake purchase, because many of these power purchase agreements or PPAs are 10 to 15 year agreements and often have a minimum requirement of 50 megawatts, translates into many millions of dollars. Other retailers still want to be involved and know that their dollars are being helped to promote the generation of new renewable assets, so they can purchase renewable energy certificates, or RECs. And those can be, RECs is the short name for renewable energy certificates. And those can be purchased to help promote wind development, biomass projects, local projects, national projects. So there's numerous opportunities for retailers to get involved, and customers care, and you can see that in sustainability reports. Again, it drives more people to your store, more customers to your store, and that's why you're seeing a lot of retailers still find ways to be able to help promote improvements in the environment and in promoting cleaner energy generation.
Yeah, I like that. Dave, did you have anything to add?
No, that very well said. In fact, the other big thing is retail stores want their customers to be comfortable. So sustainability initiatives also need to have the flexibility of not disrupting operations. And that's why there's physical ways like rooftop solar, but also, as Ricky mentioned, renewable energy credits are a financial way to participate in renewable sustainability initiatives with simplicity.
Yeah. And at Pilot, that's something that we can help companies with. Yeah.
Yeah, exactly.
I also just want to add really quickly that you're seeing more retailers focus on how do they get backup generation so that they can continue to have resiliency when the grid falters, right? I live in Houston, Texas. I'm no stranger to having times when we lose power for extended periods of time. But retailers like H-E-B, as an example, has backup generation in place that they can run their stores regardless of what the grid is doing. And that translates into millions of dollars that they can continue to bring in. And also, their brand obviously improves quite a bit when, in times of need, people can rely on H-E-B to be able to go to their store and shop, no matter what's going on weather-wise. And those are the times when people really need to go out and get the goods that they need. So retail having sustainability and resiliency with backup generation or some form that they can continue to have their operations in times of need is incredibly paramount, and you're seeing retailers consistently focus more on those initiatives.
Yeah, those are really good points because down here by the coast, we're definitely not strangers to hurricanes and losing power. So having all of that is really helpful for consumers as well.
And that really applies in all regions of the country and many industries, actually. Resiliency as well as sustainability, combining those efforts to be able to optimize their energy strategy.
Yeah, definitely. Well, thank you all so much. And I want to say thank you to everyone who submitted questions for our very first episode of Pilot Unplugged, Ask Me Anything. If you didn't hear your question today, don't worry. We're going to be continuing this series and tackling more topics around energy markets, procurement strategy, sustainability, and all the things in between. And this is really just the beginning. So in upcoming episodes, we'll focus on specific industries, starting with cold storage facilities in our next episode. And we'll be bringing in guest speakers from different industries to join us in the conversation. So if you have any questions or want us to cover your space, submit them to Pilot Energy and our team. And remember, we're always powered online at pilotenergy.com. Thanks again for listening to Pilot Unplugged. I'm Jennifer Ford, and we'll see y'all next time.